Hello there, I hope that you're doing well. Welcome to the third episode of the Zeussy 2025 public mentorship here on YouTube. Today I will be discussing a market review called Navigating NFP Week. Before I begin with this market review, I just want to share with you that everything that I share during this review is meant for educational purposes only. All the analysis which I will share with you are purely my own analysis, and I'm not telling you to go out here and trade based upon my analysis. With that being said, let us dive in to this first market review of this public 2025 mentorship. Here we're on the daily chart of Nasdaq, and what I want you to see is that I've annotated the December high and the December low. The reason why I've annotated this range is due to the following. At the time of this recording, it is the month of January. It's the first month of the new year, and therefore I pay attention to the reference points of the previous month's high and the previous month's low right away. This is my time cycle theory in action. Whenever a new time cycle opens up, whether it be a new month, whether it be a new week, whether it be a new day, whether it be a new session, etc., my eye is immediately drawn towards the previous X, H, or L. Meaning, what I'm doing is I'm paying attention to where are the key time-based liquidity pools. And when you start paying attention to these time-based liquidity pools, you immediately begin to see how IPDA is delivering relative to these levels. What you can see here on my chart is that I've also annotated this very large CB right here. This CB formed shortly after the FOMC event. Notice that this CB is very big when it comes to its size. The market retraced into that CB, and when this retracement higher took place, notice that a high formed just above 50% of that CB, and we then saw the market expand towards the downside. Notice that I've annotated the monthly and yearly open right here, and what you can see is that when we open up for this new year of 2025, the market initially repriced lower. Nasdaq took out the December low, and it took out sell-side liquidity engineered below this low. Meaning, during this whole run higher which you saw during these three opco candles, where you have the first opco candle, the second and the third opco candle, retail-minded traders are thinking to themselves, alright, we have formed a key low right here, and it's time to go long on Nasdaq. They place their stop losses below this low right here. When the new year opened up, what you can see is that IPDA referred to this low right here to take it out, to take out all of that liquidity, to then begin repricing higher. Notice that they repriced back into that old CB, that blue shaded box. But notice that when you pay attention right here, you can see that another CB formed. So what is the function of this new retracement? The function of this new retracement is again to trap buyers into believing that a strong support area, a strong support zone has been reached, so to say. Therefore, newly sell-side liquidity is being engineered throughout this run higher. And this is what I explained to you throughout episode 1 and episode 2 of this public mentorship. Narrative is crucial, guys. It's everything. And therefore, throughout the beginning of the week, we were looking for longs to target this CB right here and a very specific level inside of this CB, which I will show to you on the RE chart. After this weekly high formed, we saw the market reprice towards the downside, and we saw that the NFP news event was utilized to reprice towards the sell side liquidity pool engineered below this low. This was the previous week's low for your info. More on time cycles will come in the future within this mentorship. Here on the daily chart of ES, and what you can see is that for ES I've also annotated the December high and the December low. Next to that, I've annotated this very big CB. What you can see is that ES retraced into a premium of that CB. It traded above 50% of that CB, and we saw the market form a high there. Notice that we then saw this sudden drop lower, and notice that the market stopped right in advance of that December low. When the new year opened up right here, we saw the market drop lower, but it stopped in advance of that December low. But hey, think back to Nasdaq. What did Nasdaq do? Nasdaq took out the December low whilst ES didn't yet. And that right there was the Kraken correlation, which confirmed that we saw this repricing higher taking place back into that old CB's range. Notice that ES also rejected this CB which formed inside of that bigger CB's range. Listen closely to the words I'm using. This CB formed inside of this bigger CB's range. And therefore, you know that this is a very key CB to monitor. Notice that we initially repriced higher for the week, creating the weekly high. And we then saw the market reprice towards the downside, and the NFP event was utilized to reprice towards these relative weak lows. Therefore, my eye is drawn to this upclose candle to the left. This upclose candle right here is a bullish breaker. The reason why this is a bullish breaker is because we formed a low right here, Wednesday. We saw the market retrace. We then saw an expansion leg lower into our drawing liquidity of the December low. And this upclose candle set up that run lower. Now that we have traded above it, we must see this upclose candle function as support on price in order to begin seeing signs of bullish order flow taking place. If that upclose candle would fail to function as support on price, then it would be a big warning sign. So these are the ranges to monitor for Nasdaq. You have just watched my mentorship weekend review in which I outlined that this bullish breaker right here was the range to monitor for the week to come. The reason why this bullish breaker in particular was the range to monitor was due to the fact that this bullish breaker set up the run lower into that December low on Nasdaq. This December low got taken out on Nasdaq but not on ES as you have seen. When the market then traded above that upclose candle had to function as support on price in order for Nasdaq to be in the buy program. What were we targeting on Monday? On Monday we were targeting the following level. At first we were targeting the previous week high because the previous week high is throughout the new week of course a very important buy side liquidity pool. However, when you pay attention to this previous week's high, what you can see is that it formed in advance of another specific price level. Notice that I've annotated this old low. This old low got displaced through by this CB. Therefore, whenever you see an old low getting displaced through by a CB, you can anticipate that at some point in time, IPDA is likely going to reprice back into this old low to balance out an imbalanced price range. And that right there is what you saw occur on Monday, where you can see that the market repriced higher ever since the midnight opening, drawing towards that specific price level. Notice how they utilized this CB on the left side right here, which I've extended to the right, beautifully as support on price to make this repricing higher taking place. This was point A and this was point B. Inception to terminus. When this level was reached, what you can see is that the high on Monday formed, but this was also the high of week. We saw the market then create these two CBs right here, these two bearish fair value gaps. And you can see that consolidation took place inside of those fair value gaps. Tuesday comes along, and what does Tuesday do? Tuesday opens high throughout the morning session, and we then see this expansion lower taking place, and the market trades back below the weekly open, which I've annotated with this orange line. Next to that, you can see that the market traded below this old CB, which I've extended to the right. Notice how the market repriced through that CB's range, through this blue box, and how the next candle offered buy side into that range, and how the market then expanded lower again. That right there is signaling to you already, all right, if the markets were going to be bullish, they would have never displaced below this CB again. They would have utilized this CB as support on price. So therefore, you can now logically anticipate, all right, we're likely going to see sell side liquidity be the drawing liquidity soon. Do you understand how we can utilize that very specific price range to gouge the order flow? Here comes the thing. What you can see is that that same price range of this upclose candle was utilized throughout the remainder of the week to reprice lower. Notice how on Wednesday the market displaced outside of that range, creating this CB. Why is this displacement and why is this not displacement? What you can see here is that we saw the market wick outside of the bullish breaker, its range, outside of that red box. And when you implement time of day, you will see that this occurred throughout the end of Tuesday. And therefore, the time wasn't right yet for IPTA to begin spooing towards the downside. It is NFP week, and therefore we anticipate that the beginning half of the week, the market is likely going to just consolidate, and we wait until the NFP release before we can anticipate the major volatility to occur. And that is what you can see throughout this week, where you can see that on Monday we expanded higher, Tuesday we expand lower. So we already went up and down for the week. So what is likely now going to occur heading into NFP? Consolidation. What you can see is that this CB right here was utilized as a range that price was just going back and forth in until the time was right on Friday before the distribution could occur, targeting the previous week's low, its respective sell side liquidity. Now, when you pay attention to this price range of this upclose candle, what you can see is that this upclose candle initially was utilized as a support range, so to say, to buy off. But when we displaced through it with this CB right here, and we utilized that CB as resistance on price, that same upclose candle was utilized as resistance on price. And that is how we can navigate order flow, by utilizing these very specific arrays, which were extending to the right. Guys, we cut through candles. And that right there is a paradigm shift which has to occur if you want to read order flow like I do. I don't look at all of this back and forth going in this price action, so to say, as, oh, now all of a sudden this upclose candle is not important anymore. No, I'm still keeping this upclose candle on my chart because I know that IPTA will seek to refer back to that same low to high of that price range. And that right there is a beautiful sight where you begin to see it, because it shows to you that that right there is where IPTA is forming its respective highs and lows during specific windows of time. Because, for example, look at Friday. Where did the high of day on Friday form? The high of day on Friday formed at exactly that predetermined price range for the week. How crazy is that? Yep. You tell me that somehow that before the week even begins, we already know that at this price right here, at the lower end of that upclose candle, a lot of sellers are going to step in. Oh, these are algorithmic reference points, guys. And when you begin to view the markets from this perspective, where it's if this, then that, everything will begin to click. And you're not going to be surprised when the market does something. You're not going to be surprised when the market expands into a one-sided direction quickly. Here you can see a screenshot of the mentorship form, which I shared on Tuesday. What you can see is that throughout the beginning of the week, we saw the market expand towards the downside. Notice that on Monday, the dollar repriced lower significantly. Notice that the dollar was drawn towards sell side liquidity, resting below this low. Notice, however, that this low formed inside of an old PC. On Monday, we saw the market draw lower, and it stopped right in advance of the previous week's low. The previous week's low being shown right here. Notice, however, that the bodies kept on closing inside of this BC's price range. The reason why this is significant is because the wicks do the damage, but the bodies tell the story. Therefore, moving forward on the door, what I was monitoring this very specific price range from low to high. Notice that this low to high was a retracement leg during this sell side of the curve. We're now going to be paying attention to market maker models. What I want you to note is the following. What I want you to note is that this green box, which I've plotted on my chart, is being extended to the right. I will be monitoring the reaction to this range because it will be very telling moving forward, is what I wrote down inside of this green box. And the reason why I'm doing that is because if price would reject this green box, then I anticipate that we're likely going to see the market be stuck between these two colored boxes, between these two ranges. However, if price displaces above that green box and we utilize that support on price, then that tells to me, all right, we're likely going to draw towards these very clean highs. Because what is so important to note when it comes to these highs? What you can see is that there's a very clear trend line which you can draw from this high all the way down to this high. And that is what retail-minded traders look at as a strong resistance area. They think to themselves, all right, it's time to short the dollar. However, When a market is in a very trending environment, like the dollar has been towards the upside, we never try to capture tops. Therefore, this is the engineering of buy-side liquidity before the market is likely going to reprice higher. What confirms to me that we're likely going to see that repricing higher taking place when the market displaces above this green box and uses it as support on price. Here you can see the post in which I posted this chart with the text and such next to it. If you would want to read through this, I highly suggest you to pause the lecture now and read through the post, which was made on Tuesday on the mentorship forum. What you can see is that I've now shown the full doors delivery. And I have removed the blue box in the background because I wanted to clean up the chart so that I could walk you through this delivery properly. What you can see is that on the day of Monday, you can see that the market initially repriced towards the downside and was repriced back into this BC's price range. Notice that when this BC was reached, we saw the market find support inside of it. The wicks went outside of it, but notice that the bodies kept on closing inside of it. What you can see is that this BC's range, this red box, was utilized to begin repricing above this green box. The reason why this green box was so important was due to the fact that it was a retracement throughout this sell side delivery. Therefore, what I'm wondering how price is going to react of it the moment that we trade above it. Notice that on Wednesday, throughout the London session, we saw the market close above that range. Next candle opens low back into the green box, and we then see the market expand significantly away from it. Guys, this right here is beautiful algorithmic precision, where a predetermined range is being utilized as true support on price once the time was right. And therefore, when you see this expansion higher taking place, it shows to you that on the lower time frames, buying opportunities presented itself on the door. What was the market drawn towards? The market was drawn towards all of the buy-side liquidity engineered above these smooth highs in the form of trendline liquidity. That's another form of liquidity which you're learning now. Notice that the market then began consolidating in advance of the NFP release, which would take place on Friday. What you can see is that when we opened up on Friday, the market opened up, went higher, and it created relatively equal highs relative to the Thursday and Wednesday high. So when this occurred, to me, it was basically already pretty certain that we would likely see NFP get utilized to reprice towards these relatively equal highs and towards the buy-side liquidity pool objective of the previous week's high. Does that mean that we would trade in advance of NFP? Absolutely not. And the reason why is because NFP is one of those news events, just like CPI, just like FOMC, that can get utilized for manual intervention. And therefore, we never try to predict the outcome of NFP. However, when you pay attention to this delivery, you can see that they clearly waited until the NFP release on Friday throughout the morning session at 8:30 a.m. before they allowed the door to expand towards the objective. Now, moving forward on the door, I will be paying attention to this BC's range right here. Now, when we pay attention to my analysis on both Euro STU, you can see that on the left, I have Euro shown and on the right, I have GU shown. Again, this screenshot was shared on the day of Tuesday within the mentorship forum. What I mentioned was the following. What I mentioned was the fact that I am monitoring how Euro and GU react of the early BC's annotated which formed on Monday. If both markets displace through it and use it as resistance, I anticipate that both markets are likely going to draw at least towards the weekly open and maybe even beyond towards further sell-side liquidity objectives such as the previous week's low. Notice that the current high of the week for Euro formed on Monday, whilst for GU it formed on Tuesday. This intermarket relationship has to be paired with the doors analysis, the Dixie's analysis, outlined prior to confirm one-side order flow being present across the board. What I outlined was this specific BC. This BC was the range which I was monitoring on Euro to gauge the order flow. This BC was the range I was monitoring on GU to gauge the order flow. The reason why that BC in particular was so important on both markets was due to the fact that it formed on Monday, whilst I had that bullish bias on the door and still that bearish bias on both Euro STU. Therefore, what I'm monitoring is how the markets are going to react of this very large imbalance. Do you see the size of that imbalance? That right there shows to you that what is actually being done by IPTA is the following. It's trapping people into believing that we're likely going to see Euro and GU expand towards the upside. It's trapping people into believing that we're likely going to see the markets continuously expanding higher, 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 because that is what happens when retail-minded traders see these big upgo candles, right? However, you need to begin looking at that from a different perspective, because when higher time frame draws on liquidity haven't been met yet, such as for example for Euro, this price level right here, what you must anticipate is that this is likely manipulation higher, trapping people into believing a false idea so that we can short against that. When you pay attention to the delivery on Tuesday, on GU to the right here, you can see that GU opened up, repriced higher, trading above that Monday high, which is again a time-based liquidity pool. Think back to time cycles, what I began this lecture with. And we saw the market form the daily high there before it began expanding towards the downside. From this moment in time, I'm monitoring this BC in particular. And the moment that price displays through this BC, I'm expecting that it's likely going to function as resistance from price and that it can get utilized to short of targeting lower prices. If the door confirms its respective buy program, of course, because that is how we utilize intermarket relationship. When we pay attention to the delivery which occurred, what I want you to see is the following. What I want you to see is that we saw the market expand away from that Monday high right here, and notice that this CB formed. We saw the market retrace into that CB, and keep in mind that price is still trading inside of this very large species range. Notice that we saw the market consolidate near the lower end of that BC, and then Wednesday came along. Wednesday opened high back into that BC's price range, and notice that we then formed a daily high before this low resistance liquidity run towards the downside occurred. Notice how GU was in a rush to reprice towards the downside. Notice how it was in a rush to reprice towards the weekly open, and the moment that we displaced through the weekly open with this candle right here, it tells you that the previous week low is likely going to be made jacked. And after that, in order to confirm that we're likely going to see continuation taking place, we must monitor the reaction to that previous week's low sell-side liquidity pool. What you can see is that the market consolidated around that level, and it actually started a retracement into this hard CB. Notice that the market just tapped the CB and then rejected it. More consolidation occurred. A new expansion leg towards the downside takes place, and a new CB gets created. Notice that this CB was again utilized to reprice lower from when the time was right. When was the time right? When the NF pre-release took place at 8:30 AM on Friday. When you pair this with the very bullish order flow which has been present on the door, you will begin to see, aha, this is what IPTA is doing. It's literally tipping its hand. During this lecture, you have literally watched me break down to you how IPTA was tipping its hand for what it did the past week. Notice that this is not just hindsight chatter. Notice that I'm not making up new ranges. No, all of these ranges were predefined within my analysis, which I outlined. Guys, I'm annotating the same boxes. I'm annotating the same things. And I hope that this inspires you to dig deeper. I hope that it inspires you to begin looking at the markets from a different perspective. What I hope that you learned throughout this episode of this 2025 mentorship is that these market swings can be anticipated in advance. And the way that they can be anticipated is by paying attention to these very specific ranges and monitoring the reactions of them. When IPTA tips its hand to you, we can anticipate the next delivery function. And that right there is the main takeaway which I want you to have from this lecture. I promise to you that if you show up every single week, if you show up every single day, investigating, at one moment in time, it will all click. And when you are able to basically know what I'm about to say before I say it, that's when you have arrived. Because that's when you see how these algorithms are delivering price over and over again. And that's going to be a very fun journey for you to work towards. So I want to wish you a very nice weekend. Thank you for watching this lecture all the way to the end, and I look forward to catching up with you soon. Be safe.